Global markets shaken by North Korea's latest missile test. The Hermit Kingdom firing a mid-range ballistic missile over Japan yesterday, sending a clear message of aggression to both South Korea, the United States, and quite frankly, the world. Futures are sinking across the board, 118-point loss on the Dow futures as investors rush to safety. Gold prices climbing to a 9.5-month high, gaining $11 an ounce. We also have seen money moving into U.S. Treasuries as well. Joining us now is CFRA Chief Investment Strategist Sam Stovall. Sam, is this surprising to you, this reaction?
No, it's not surprising. Investors basically are unsure as to what's going to be happening, so they sell first, ask questions later. And the question they typically ask is, will this lead to recession? And usually things like this don't. It ends up being more of a localized event, but not something that's going to affect the national or even the worldwide GDP.
But even when you look at previous acts of aggression, terror attacks, when you start talking about nukes, this is an altogether different scenario. And is it tough to quantify the potential impact of rising tensions with North Korea and how we might respond the next time North Korea does something like this?
When you're dealing with irrational leaders, it's very hard to come up with a rational conclusion as to what's going to happen. So I think the storm is a lot easier to ascertain than the Korean situation.
Putting aside for a moment these events, the storm on the one hand and North Korea on the other, what are the underlying fundamentals for the market and for the global economy? Is there upward momentum there? Is there a solid foundation of profits to build on if these events go away and we get back to some state of normalcy? Right.
Looking at the storm, looking at Korea, those are headline events, but the market focuses on bottom line events. Right now, yes, the market is priced to perfection, if you will. We're trading at 23 times trailing gap earnings, very expensive on a forward basis as well. But that's only if you look at it in isolation, meaning looking at valuations without also considering inflation. With inflation being at 1.7%, historically, we're actually right smack in the target of where we normally are, and with each of the last 22 quarters exceeding the estimates at the beginning of the quarter, the fundamental trajectory is actually fairly positive.
We had a story late last week about how this is the first time since the late 1980s, actually, when all of the world's major economies are actually growing at the same time. It's the first synchronized upturn we've seen in decades. I think that helps explain why markets have been rising, not just in the U.S., but elsewhere around the world. How do you see that playing out over the months ahead? Do you think that's a sustainable development?
I think it's sustainable. I also think it's supportive of the market direction here in the U.S. The MSCI EFA, the Developed International Benchmark, had underperformed the S&P 500 in 7 of the last 9 years.
Wow.
So basically investors were saying, I don't want to go overseas at all. Now, in a sense, we're seeing more of a rising tide lifting all of the boats. We're seeing a broadening of the participation rather than the narrowing, which we normally do when bull markets come to an end. So I would tend to say,
outside of emerging markets, Spain and Italy, ironically, are 2 of the best performing stock markets in the world this year.
I want to talk about Houston and the storm and Harvey. I want to move down south and weighing on the energy sector. This is a way that we can quantify this horrific natural disaster for the entire country. ExxonMobil shut down its Baytown oil refinery. I think it's the 2nd largest in the country. And the roof sank due to heavy rain there. Sam, Baytown, we're talking about 15% roughly of all refining capacity in the United States is shut. It could go up to 30% as this storm moves into Louisiana. What about the potential? Because when you weigh the economic impact of this, you have to look at the property damage, how much of that is insured when you factor in the insurance industry, but the impact on the energy sector. And this is the first major storm that we've had on the energy sector since the real takeoff of the oil, the shale boom, if you will, since we've really kind of become stronger in our energy sector. So how do you think this plays out? Long-term effect on energy, long-term effect on the economy, maybe?
Well, the first thought is, how expensive is this storm likely to be? Estimates now are about $100 billion. That would rank it number 2 behind Katrina at 125 and above Sandy at 75 billion. So this is going to end up being an expensive storm, not necessarily as catastrophic in terms of lives, et cetera, but rather just property damage because of all the rain for such a long period of time. We estimate that about 50% of U.S. refinery capacity is in that area. So the vulnerability is tremendous. You really only have special situations like a company, Holly Frontier, that has most of its refining in Kansas, Nebraska, Utah, et cetera. So most of the major refiners are found in that Houston area. What we've been seeing with the oil prices themselves, still below $50 a barrel, I think investors are really trying to ascertain, get their arms around what this could end up translating to.
We've talked about that because the stockpile of crude oil is still there, but it's refining that oil and ultimately making gas, so we expect gas prices to go up. But one of the questions I have for you is that I think it's about a third of all U.S. oil exports, so 22 million barrels in the first quarter actually left through Corpus Christi. So what do you see as the impact to the economy as far as our oil exports from this storm?
Well, obviously there would be a major impact with that. The storage and transportation group within the energy sector could be adversely affected by it. So we look for those companies that have transportation, let's say, out of California or other areas that would be able to benefit.
Sam, good to see you. Thank you so much for covering so much this morning, Sam Stovall.